Higher inflation has been everywhere. It's at the grocery store, it's at the gas station, it's baked into the price of services and goods that you're buying. And I'm going to tell you about ETFs on today's episode that have been benefiting from higher inflation. Also, we're going to get into the surging price of Ethereum. It's now beating Bitcoin. Plus, what about growth stocks? They've been crashing. Is the party over? All of that and more, so stick with me. I'm DeLegge with ETF Guide TV. It's great to have you with us. I've got a few charts about the latest trends in stocks, cryptocurrencies, inflation. We'll take a look at industry sector performance. And of course, one of my favorite things, market psychology. We'll take a look at sentiment figures and see where we're at thus far in 2021. I also have a public service announcement coming up later, a reminder about the importance of investing with an adequate cushion, or what I call a margin of safety. It's something that I've repeatedly told you on this program that is so crucial to your long-term success. So we'll get into that a little bit later. If you're here for the first time, be sure to hit that subscribe button. If you like our content, hit that thumbs up. And also, I'd like to hear your comments. I love to interact with the audience, so if there's something that you observe that you'd like to mention about today's episode or anything else on your mind financial, just drop us a line below. Also, I want to mention that I've got online classes, free ebooks, lots of resources for all of our viewers in the description section area below. So be sure to hit that. I also have a portfolio grading service. And I want you to take full advantage of these tools. I built them to help you achieve your dreams and to improve your investment results. So here's a look at the triple Qs linked to the NASDAQ 100 versus the S&P 500 ETF. That's ticker symbol SPY. You'll notice performance-wise, the Qs have lagged since the start of the year relative to the S&P 500 ETF. Now, much of that is due to the triple Qs overweight exposure to information technology stocks, which as a group are still up, but not as much as the other industry sectors, and we'll get into those in a second. But it should be noted that QQQ versus SPY, they're neck and neck in terms of their one-year performance record. Both are up around 48%, which is a pretty impressive return. So I guess maybe I should be saying, instead of the triple Qs lagging, maybe I should be saying that SPY is finally catching up to the hot performing Qs. I guess it depends how you look at it. Next up is this discussion and major trend change that we've seen away from growth stocks into value stocks. And so I like to look beneath the market's hood, so to speak. And you'll notice this chart illustrates that really since the beginning of January, value stocks have been outperforming growth. You've got ticker symbol RWVG, which is an ETF from Direction that overweights value stocks relative to growth. And you'll notice that it's up almost 25% year to date. It's been a winning trade. And you can see that its counterpart, RWGV, which does the opposite by overweighting growth stocks relative to value, is down about 2% and languishing by comparison in terms of performance. Now, the cool part about these two ETFs is that they allow you to tactically trade value over growth or growth over value in one ETF ticker in one single ETF trade. Now, 5 years ago, if you wanted to make this sort of trade, it required several steps. You'd need to go long growth or value while simultaneously shorting growth or value. And it was just sort of a complicated thing for some traders, and to many, way too many steps. So now you can make this same trade with just one ETF ticker. And this, by the way, is just another sign of the overall maturation of the ETF marketplace, just giving investors, everyday people, the tools to make the sort of tactical trades that once upon a time were strictly reserved for sophisticated investors in previous eras. Well, not anymore. Now, part of the rotation out of growth stocks is seen in this next chart. We've got ARKK, the poster child of high growth stock investing, and it's struggled so far in 2021. It's posted so far a 16% loss year to date. It peaked out in February with a 25% gain, but man, it has been down, down, down ever since then. Keep in mind that ARKK is an actively managed ETF. I've charted ticker symbol MOON, which has a similar thematic approach to growth stocks, but it uses an indexed strategy. And it also, like ARK, has a very concentrated portfolio. But you'll notice Moon is performing much better than ARKK. MTUM focuses on the same type of high growth, high momentum stocks. And as you can see, they all have a very high correlation to each other. They're all moving and trending in the same direction. But the question is the massive growth, or is this massive run in growth stocks, is it over? And how much further will these stocks fall in value? Well, I can promise you a couple of things. Number one, it's going to get better, but they may get worse before they get better. And the proper position sizing is so important with these types of high growth investments. They have very high ceilings, but they can also have very deep basements. And so it's so important to have an adequate cushion or margin of safety inside your overall portfolio. That's going to keep you grounded, and it's going to help you weather the storm without jumping out of the ship and risking your life. More on the margin of safety in just a little bit. Everyone's been talking about this next thing, which is higher inflation. And you can complain about it, or you can hedge yourself against it. And you'll notice this chart illustrates the impressive performance of commodity ETFs thus far in 2021. USCI, which tracks a basket of commodity futures, between 14 to 17 different commodities across various sectors like energy, agriculture, metals, delivering some impressive results, now ahead by over 22% year to date. It's a good, by the way, what I would consider a core commodities portfolio, just because it has exposure to the entire complex, not just one commodity. USO is linked to crude oil and UNL to U.S. gasoline, both of them up double digits year to date. And commodities, again, are doing quite well. They've also been impacted by things like war and weather and security breaches, which is something we've seen here over the past week or so here in the U.S. That sometimes will trigger supply disruptions, and that's why we're seeing right now a spike in some of those energy commodities like gas. And the overall trend, though, for commodities remains up, and especially as higher inflation remains up. This next chart takes a look at S&P 500 sectors that are closely tied to commodities. So here's another way to participate and hedge yourself against higher prices. Energy, XLE, and materials, XLB, are both having a breakout year. They are among the top performing S&P 500 sectors. And if you believe that thesis, and I do, that the economy is reopening and we're going to have a recovery eventually towards full capacity, that's still underway and unfolding, there's still probably some more upside as demand pushes prices higher. So keep an eye out on XLB and XLE. Now, speaking of up, we can't get away with any conversation that eliminates or ignores what's been going on in the crypto marketplace. We've got Ethereum, the Ethereum Trust, ETHE, which has surged almost 140%. It's outperforming both the Bitcoin Trust and a basket of large cap cryptocurrencies. That's ticker symbol BitW. And there's a lot to like about Ethereum's move right now. I've got, I've said multiple times on this channel that I've always liked Ethereum better than Bitcoin, just because I think it's got more utility. And they're actually doing stuff with Ethereum in the financial services industry. They're building infrastructure and technology and stuff around Ethereum. And the other thing, too, from an investment perspective, is certainly a lot more affordable than Bitcoin. But the overall crypto marketplace remains hot. And, of course, there's going to be blips. There's going to be some scary drawdowns along the way. And the reason we know that is because it's happened in the past and will happen again in the future. Crypto will absolutely get creamed. Right now, it's not getting creamed. It's going up fantastically. And that's usually how the crypto marketplace has behaved. It goes up fantastically, it goes down fantastically. But again, having a controlled exposure to cryptos, even in tiny dosages, can keep you participating in this massive and major multi-year trend without getting shaken out of a position due to some crazy daily moves. Next, let's take a look at stocks from another perspective, the Fear and Greed Index, which attempts to measure the market's psychology or the market's mood. And as I said many times before, that the single most important factor shaping prices in the stock market is psychology, the public's psychology. That's you and me. That's investors. And if the investors are exuberant, well, then prices will be up. If investors are nervous or fearful, well, then prices are going to be pushed down. You'll see right now we're at 41, which is right in the middle. 0 is extreme fear, 100 is extreme greed. Yes, the market is fearful, but not really in a very extreme way. We've also seen an uptick in safe haven demand. The stocks have outperformed bonds by almost about 1.5% during the past 20 trading days. And this figure, if we look at just a recent history, is close to the weakest performance for stocks relative to bonds in the past 2 years. And it indicates, again, that investors are starting to flee some of these risky assets in favor of less volatile bonds. We've certainly seen that happen in high-risk segments of the equity market, like SPACs, as well as some of these biotech companies that don't have earnings, companies in the EV market. So that's certainly a trend to keep an eye on. So key takeaways for today's episode. Oh, I forgot to mention S&P 500 sectors. We got all 11 in positive territory. I think that's, again, an indication of the strength of this market across multiple industry sectors. That's what you want to see. And right now, the industry sector performance is very supportive of higher prices, even though prices are consolidating as of late. So, key takeaways for today's program: we see value stocks beating their growth counterparts. We see commodity ETFs and most commodity sectors are in positive territory. Of course, Ethereum has been outperforming Bitcoin. Some of those altcoins are doing even better. And right now, and I remind you very staunchly and very strongly that right now is very important to make sure that your portfolio has an adequate cushion, or what I call a margin of safety. You want to be doing this when market prices are on the rise, and this is the best time from a timing perspective to carve out a portion of your portfolio for your safety net or your cushion. Provides you with capital preservation, it provides you with zero volatility, and it provides you with liquidity. And also, by the way, provides you with a lot more flexibility than these investors that are over-leveraged and invested to the tilt, fully invested. So these are the benefits of having an adequate cushion, and you do that right now. You don't do it later because you want to take preventative action, right? You want to protect yourself ahead of the market correction, or even worse, during a crashing market when prices have fallen and decimated some of your investments, and thereby reducing the value of your portfolio, right? You want to make sure that you're able to ride that out. And so having an adequate cushion now more than ever is so important. So ask yourself, am I taking excessive risk in my portfolio? Is there some areas that maybe I need to improve? Well, I can help you find out the answer to these questions. You can get in touch with me at portfolioreportcard.com. I'll analyze and grade your portfolio, not just in terms of risk, but also some of those other important areas like cost, as well as taxes, organization, behavior, and diversification. That just about does it for today's program. I hope you've enjoyed our show. Do not forget to hit the description section below. I've got lots of free resources for you, like ebooks. I've also got online classes, of course, the grading service. And also, just by way of reminder, be sure to hit that subscribe button for new viewers. And be sure to check out our other weekly programs like ETF Battles. And we'll have a new episode coming up this week. And that's it. I'm DeLegge. Thank you so much for watching ETF Guide TV. We'll catch you next time.